how to spread your money into multiple mutual funds for maximum return. In this video, I will show you exactly how to invest in multiple mutual funds in Nigeria without any confusion at all. By the end of this video, you will know the perfect way to spread your money so you can earn steady return and still enjoy the long-term growth of your investments. If you love videos that explain investing for Nigerians, please join this community by clicking on the subscribe button and also like this video so that anytime I drop a new video, you'll be the first to get notified. Let's get into today's video, how to spread your money into multiple mutual funds for maximum returns. But before you start spreading your money around into all the funds, you must understand the different types of mutual funds in Nigeria. I want you to think of mutual fund like a different pocket with different goals. The first one is the money market fund. This money market fund are for safety. They invest in treasury bills, commercial papers, and short-term instruments. For beginners, treasury bills is just like you borrowing the government your money. And in return, they give you your capital and your interest. It is safe and considered one of those best investments in Nigeria. Also, commercial paper is when you give companies, big companies, your money. You borrow them for short time. Money market fund gives stable returns and your money is usually available quickly. You can invest in a money market fund account today and tomorrow you want to withdraw your money. Money market fund is very liquid. Your fund is available anytime. It is open-ended and it is good for every types of investors, both the beginners, the experienced investor. In fact, the money market fund is one of those most popular mutual fund in Nigeria. And two is the bond fund. These are also types of mutual funds that is categorized as a medium risk. It is good for investors who are looking for a way to grow their money. They invest in government and corporate bonds, and the bond fund pay higher interest than a money market fund, but it is categorized as medium risk, while money market fund is low risk. Why is it medium risk? Because the bond fund borrow corporate organization. So when you borrow a company your money, they can pay back and sometimes they can default. But if you do the government bond, like the popular FG bond, federal government bond, that one is very low risk. So depending on the kind of bond you invest in, that will determine if it is low risk or it is medium risk. And another type of mutual fund is the equity fund. These are for growth. The equity fund invests mainly in the Nigerian stock market. So any investors that invest in equity mutual fund are indirectly investing into the Nigerian stock market. And you know, the stock market move up and down more often than any other investment, but they can grow your money faster over time. And then we have the balanced fund. These are a mix of stocks and bonds. This word balanced means this fund is balanced in the sense that they invest in both the low risk and the high risk assets, combining the one that have the bigger risk and the one that have the lower risk. This is just to make sure that they mix your portfolio with the performing stocks, equities, and they also mix it with the bonds, with the money market fund. Let's just say this balanced fund combine every types of mutual funds. It's combined the money market fund with the bond fund, with the equity fund. That makes it a balanced fund. You see, once you understand all these types of mutual funds that are available for you to invest into, the rest becomes easy. Next, you need to decide how much of your money should go into safety, into growth, or a mix. You know, the money market fund can be categorized as the one for safety, while the equity can be categorized as the one for growth. Then the balanced fund, let's say that one is a mix. And when you decide how much you want to invest, it means your fund allocation. For beginners, you can use something simple like 50% for MMF, which is the money market fund. Then like 30% for the bond fund. And then 20% goes into equity mutual fund. But if you want stable income, you put more money in a safe funds. Money market fund have a kind of stable yield. It doesn't fluctuate like the equity mutual fund. So like what we have done here, we have put 50% on the MMF, money market fund. We have put 30% of our money into bond. We have put 20% into equity mutual fund. But if you are young and you are thinking of growing your wealth for long term, you can put more money into equity fund. That means we can say 50% will go into equity fund. Then you can split the other 50% into the money market fund and the bond fund. Equity fund usually grow your portfolio faster, even though it is categorized as high risk because they invest it in equities, in shares of Nigerian companies. Your fund allocation will determine how fast your portfolio will grow. Now, after you have chosen your allocation, the next step is to pick the specific mutual funds you want to invest in. For example, I want to show you examples of mutual funds for each of the categories I have mentioned in this video. I mentioned the money market fund, and one of the example of money market fund you can invest in Nigeria is the Stanbic IBTC money market fund. The Stanbic IBTC money market fund is one of my popular choice for Nigerian investor because Stanbic IBTC money market fund is very popular. The second category is the bond fund. And for the bond fund, I have picked the Federal Government of Nigeria Bond Fund, FGN Bond Fund. This is available on most investment platforms. You can check with any of the investment apps you are using for the FGN bond. You can as well seek advice from your bank. Some Nigerian banks can allow you to buy into the federal government bonds. And under the third category, which is the equity mutual fund, I am going to pick the Stanbic IBTC Nigerian Equity Fund. You can also find this on the Stanbic IBTC investment app, which is called Blue Nest. So you can go to the App Store or the Play Store and download the Stanbic IBTC 3.0 app. This is where you can see all these investment options. And if you already have a fund manager or an investment app that you trust, that are SEC regulated, that you are currently using, you can also search for all these investment opportunity there. Then you can begin to invest in the mutual funds according to this category. Okay, let's talk about how to diversify your investment. Let's say you want to invest 100,000 naira every month into all the categories we have mentioned, the categories of the mutual funds, starting from the money market fund, the bond fund, and the equity mutual fund. But know that the better method is a monthly contribution, not just one investment. If you're going to be investing 100,000 naira, you can do it every month. Then we are going to split this, we are going to spread this 100,000 naira into all those mutual funds category. For example, if you are not a young investor, if you are like, let's say you are like 50 years old and above, you can say your 50,000 naira will go into the MMF, which is the money market fund. Then let your 30,000 naira go into the bond fund. Then let the remaining 20,000 naira go into the equity mutual fund. But if you are young, let's say you are in your 20s or you're in your 30s, you need to change how you split this 100,000 naira. Maybe your 50,000 naira will be invested into equity mutual funds. The 30,000 naira will be invested into the bond fund. Then 20,000 naira into the money market funds. This makes your investment smooth, even when the market goes up and down. You should know that markets change. Interest rates can rise or drop sometimes. Some funds outperform others. This is why you must review your mutual funds portfolio at least twice a year, maybe every 6 months. Ask yourself simple question: is my money market fund still paying well? Is my bond fund still stable? Is my equity mutual fund still growing or struggling? This is why you must check your portfolio. You can even adjust it. When one is not performing well, you withdraw from this place and you invest it in another place just to maximize your returns. So you must keep on adjusting your allocation and move money to something stronger, something that is performing. This is called rebalancing in investing. And also make sure you don't over diversify. A big mistake many investors make is spreading money into too many funds. This does not help you. It only confuses you. You don't need 8, you don't need 10 mutual funds. 3 to 4, maximum 5 is okay across different categories. To grow wealth, you also need to keep records and stay organized. You need to track what you invest in every month. Track how each fund is performing and track your total portfolio value. You can use apps or even simple Google Sheets that allow you to track all your investments. The more organized you are, the faster you will see growth. If you want me to help you build a personalized fund allocation based on your income or your financial goals, just let me know in the comments. If you watch this video to this stage, that means you are ready for a financial shift in your life. Your financial freedom starts with simple steps like this. Thank you again for watching this video. Please let me know in the comments which of this fund you are currently investing in. Is it a money market fund? Is it an equity fund or a bond fund? And tell us how you diversify your own portfolio. Thank you again, and I see you in the next video.